All right. Good morning, everybody. And yes, it is still morning time. We have one of the most important panels of the day here. So, everybody that is around the stage, feel free to come back in and tune in to these great panelists that we have today. They're going to be talking about how to secure funding in a bear market. I feel like everybody in this room wants some funding, needs some money. Investors are going to be on stage. They're going to be able to give you those key tips and tricks on how to secure funding for your project. So tune in. You're only really going to be able to hear the panelists if you're inside this safe zone here. You'll only hear the secrets if you really have a headset on. So please come in, stay tuned, and we will take it from there. So I guess without further ado, we will invite our speakers onto the stage, I think very, very, very soon. I hope you're all having a great day. Just an FYI for all of those going to the gala dinner, the gala will it'll actually depart from here at 7 p.m. Buses will be outside just like they were for the desert experience. So I think on that note, we can invite our speakers to the stage with Nikita, who will be your moderator. So welcome. Let's give them a round of applause. Thank you.
Check. Okay, I'm just making sure everyone can hear me. Awesome. Well, hello everyone.
Hello, everyone.
Hello.
Love this concept. It's like so
Yeah.
private and,
so-
and enclosed. Got everyone's attention here. Very nice to meet everyone, and thank you so much for joining our panel on this beautiful Saturday morning. We definitely have a room of Web3 enthusiasts who are committed to come here on a Saturday. So I guess this panel, I feel, is one of the most important topics in this market. I was so honored to be chosen as a moderator for this topic that we get asked all the time. Before we dive into the topic, let's start with introductions. So I'll go first, and then you guys can take it over. So my name is Nikita Sachdev. I'm the CEO and founder of Luna PR, Luna Media Corp. We are a PR and communications firm. We're headquartered here in Dubai with offices in Miami, Singapore, opening up London Q1. We focus on the Web3 space. In 2017, I started my career with Huobi Exchange out of Singapore, but I'm from Texas. Now I'm in Dubai. And I've been very passionate about the space. 2 years ago, we acquired Cointelegraph Middle East, so running the publication for the Middle East and North Africa. And I was a host of CNBC Arabia's first ever Web3 show, which I also co-produced. It was called On the Chain, and it's a seasonal show, hits 50 million homes. So that's me. I'm very dedicated into bringing Web3 into mainstream media. Now over to you guys.
Thank you. Good afternoon. My name is Vijay Chirathrai. I'm the managing director at Techstars, also representing the region of Middle East, North Africa, Pakistan, India, and Turkey. Techstars is the most active pre-seed investor in the world today. We do about 700 investments across all sectors. And we have a very dedicated program in Web3, specifically in Ireland. We've invested close to 400 companies that's related to Web3 or Web3 related companies. We have a portfolio size of 4,000 companies today. In addition to this, we also are very actively involved in ecosystem development around the world. Here and specifically in the Middle East, we have presence in the UAE, KSA, and the wider region. Pleasure to be here on this panel.
Hi, good afternoon, everyone. My name is Mana Rifki. I'm the CEO, co-founder of Klumi Ventures. We are a VC fund based in Abu Dhabi Global Market. We just got the in-principle approval recently. So just moved from Singapore to Dubai or the UAE recently. So we are a women-led VC. We try to help funding women in the space, but not only. So to help them have the funding, we are doubling down on education. Myself, I'm a PhD researcher. I lecture in universities. and advise some of the central banks in the region, especially a Central Bank of Oman. So for us, education is something that we would like to spread as a VC because we believe that education is the way forward to help adoption, but also help more women, which is like our interest in the region, to help them get educated and therefore come up with more impactful projects in the industry. Thank you.
Hi, I'm Matthew Ploman. I'm one of the co-founders of Mihan, the maker of the USDM stablecoin. We are not a venture fund. I have spent 15 years on Wall Street and the buy side and have experience on maybe both sides now as a project founder trying to raise capital and as an investor in formal finance.
Hi, my name is Takashi Hayashida. I'm originally from Japan. I'm a managing partner at Emago Ventures, the VC arm for Emago Group. Originally, I spent 10 years in the commodity trading and investment banks, including BNP Paribas, Goldman Sachs, Merrill Lynch, after which I operated my private equity fund out of Japan, and I joined Emago Group as a investment committee member for Emago Group, where my job was to invest inside the Cardano ecosystem. And since last year, I joined Emago Ventures as a managing partner to start to invest to seed early stage startup, aiming more financial goal, and also connecting different ecosystem with the other layer ones and region agnostic with the other ecosystem outside Asia where Emago was born. Thank you very much.
Awesome. Thank you so much. Great panel. I'm very excited to kick off with my first question. On the entire ecosystem as a whole, what are Web3 focused VCs looking at these days? What's the investment trend?
So there are different area where a lot of people is focusing, but obviously one of the sector would be in DeFi space, especially real world assets or any protocol that enable to connect the real asset, the conventional finance with the Web3. Which has been the latest topic that we've been focusing on the last 6 months or so.
Maybe you can let us know what industry. I mean, specifically, I would like to focus on the Web3 space. Just an example, AI has been a huge thematic in the last couple of months. Is it a fad? Is it genuine interest? Is it a bubble? Where are VCs looking at investing, particularly in the Web3 space?
I guess like every venture fund have their own thesis, and for us, we would like to invest more in infrastructure. So the idea is to have more projects that they are tackling real-world problems. I really enjoyed the last panel about impact in emerging markets, and I guess this is the kind of projects that we need more in the Web3 space, because the idea, we don't want just some protocols that some geek people they will be using. We want real world asset tokenization. We want real problem-solving projects and more impactful projects, because in the end of the day, to go for the next wave of the Web3, we need more projects that they are not only helping builders to build more on the blockchain, but to bring like the next wave of Web2 companies to the next wave of the Web3, and that's like the biggest opportunity that we can see, and this is where the big adoption can be seen. So to go from 2 trillion to 3 trillion and $5 trillion industry, we need adoption from the existing Web2 companies, and I guess infrastructure and other protocols. That's what can help the Web3 grow more and have more active users in the end of the day.
Vijay, what are your?
Yeah, I'll just add that I think, particularly for me, the intersection of blockchain and AI is a very interesting space to look out for, because I think there's a lot of massive innovation in that space, and so the collusion of those two industries would be something we are very excited about. The second is when you look at settlements, I think particularly what MasterCard and Visa is focused on trying to minimize the 2 to 3 day transaction settlements down to a fraction of seconds is really interesting because there's a lot to be saved from transaction fees, speed of execution, and that's another area that we're looking at. I think NFT was a buzzword. People almost forgot about it, but if you look at the creative economy in terms of media, arts, music, there's still a lot of tokenization that's taking place in that realm, and that too is an exciting space.
I think, exactly, like the space is evolving so quickly. In 2017, it was like all about ICOs. Nobody cared what the ICO is about. You can have banana coin and, it'll raise funds. Then, DeFi had a massive boom. Not saying DeFi was, a bubble, but it's certainly made a very strong comeback, or it's been here. Then you had the NFTs. You have a little bit of the metaverse, but metaverse market has also kind of really calmed down. So it's interesting to kind of see what the next thematic would be. AI is something that we're hearing constantly. I mean, as a PR communications firm, we put AI on the topic and every media wants to pick it up. But I think there's like one underlying thing that everyone here mentioned was that Web 2 to Web 3, the transition, the real world use cases, this is very important. It needs to make sense. It's great to have like established companies that have trialed and tested in the Web 2 and now are coming into the Web 3 space and implementing this new technology, already have the user base because they bring mass adoption with them. We talked about which industries are your focus. But when it comes to Web3, what traits are you looking for? What kind of traits should a company or project possess in order to successfully at least raise interest from VCs?
Maybe I'll just jump in and say that I think three things that comes to mind. One is basically scalability. And I think a lot of innovation and ideas are taking place, but much of these companies can't scale because they don't have the network effect or they don't have the right technology platform to be able to scale. The second is interoperability, because that's where the true value creation comes about, when you can actually transcend different coins to different platforms in the most efficient way. And I think particularly from what I look at, there's an inherent bias to look for those companies that can have interoperability. And I think the third is really sustainability of these entities. We've seen way too many companies emerging and overnight disappear. A bulk of them are scams, sad to say. But I think sustainability will be a key characteristics that we will look into, particularly with the proof of stakeholders, proof of work, in terms of whether they have the ability to sustain funding on a long-term basis. Just a word on ICO that you mentioned. I think it's kind of sad to think that there's only one goal. That's we need to ICO, tokenize it, raise capital. It should not be viewed as a one-way street. Fundraising has to be an ongoing process. So can you sustain that with the entities that you invest in? And I think that's a key nuance that we're thinking about today.
I'm curious, I want to touch base on what you said a little bit more. So you definitely mentioned traits that you want to see a company have, and mostly technical traits. But what about things like team members being doxxed? That's a big thing in the crypto space, right? Anonymous team members. What about teams' backgrounds? Does that I've heard a lot of investors say that they invest in people, not projects. Is that a thing? Do you align with that?
Totally. I think particularly for early stage investing in the spectrum that we are in, the team outweighs the mix in terms of what the metrics or criteria you look at. And I think the credibility factor is really what we're looking for today. There are a lot of fly-by-night operators that we are very concerned about. So what does the team bring to the table in terms of credibility, its background? You're looking for that trust factor, and I think that's crucial that weighs into that decision. But in addition to the soft metrics, so to speak, you also have to look at the hard metrics. the market capitalization potential of that business size, the exchange flows, and as well as the transaction fees and the adoption rate for these coins or products to get out in the market is a key consideration for us today, because it's about how fast can you scale and how big is the addressable market is a key consideration in terms of investing in these companies.
Now, Matthew, I want to come to you last on this because you're on the other side. You're looking for investment. Before I come to you, I want to know what else do you have to add on to what Vijay had to say? What other traits are you looking for in a company?
I would say so. If I add a little bit of color on when we, precisely speaking, look at the company whenever we invest on the team side, we look at how focused they are. If they are wearing double hats with the other businesses, with the other project, or whether they're all in, because the worst case, the worst thing that we wanna worst situation where we would be in is to lose money after our investment. So we would much prefer to have someone really focus all in with each of the team member, not having multiple projects that they're running behind or operating behind, but being really all in, and whatever you do, attached to the business, the main business, so that we know that we can be really on the same board, on the same boat, and sharing the same incentives, same objectives all together. This is what I think the ultimate thing that I would look at the first thing when I look at the one company or project.
That's a very interesting way. So you really look at who the founders are, who the team is behind the company. How important is jurisdiction, where they're based, or who the other backers are, who their supporters are? How important is in Web3 a white paper or tokenomics? How important are competitors in this space or user base, community? That's one thing we get all the time. PR communications firm, I want 100,000 community members and then the VC is going to look at me. Is that important? Is that something that is
all of
looked
you,
at?
which you mentioned, matters much in a decision-making process. But I would say that the most biggest factor that we are looking at is their ability to capture the demand, the customer's demand, whether it's a present demand or a future demand. When we are convinced that the team or the founder has the ability to assess where the demand is and the project is ready to respond to the demand, regulations would be a big matter in some cases, especially in DeFi space. But at the end of the day, those are the kind of a secondary thing that can be worked out with the team or with the help of other partners. But if the founders don't assess where the demand is, that's a fundamental problem, and I think those kind of projects wouldn't fly high.
Manal, anything to add on to that?
I guess I would add, besides scalability and interoperability, I guess UX design is very, very important for a lot of crypto projects, because having a seamless UX design for the users is very important. A lot of projects that we've seen, especially in the infrastructure projects, they are very geeky and they're very hard to have that seamless user experience. So I guess like the next wave, talking about real adoption in the world, we need to have one click away to get either your wallet or wherever, and that's what can drive again like the adoption.
I mean, you guys want companies to succeed, right? They succeed, you succeed. We have a similar objective. At Luna VC, we're very strategic. We invest and then we provide a PR communications timeline for the next 1 year. And we have a checklist in place. Number one, a strong team, good credibility, good backgrounds. Number two, their business model makes sense. That it will generate revenue. A lot of the times the numbers don't add up, the tokenomics don't add up. Number three, we want to see strong backers and partners. if we see that the number one VC has invested, we feel super bullish about the company. We also feel like what Sequoia's done their DD. let's follow through. And then, we just want to see, a well-rounded project. So I'm curious, Matthew, from a project perspective, from a company perspective, what are investors most interested in when it comes to your company?
Well, I for one am flabbergasted that there are so many fantastic projects on Cardano that don't have any funding. Every year we've gone through now 10 cycles of Project Catalyst, and that's supposed to start the project, start the launch of the new venture, and then there should be follow-on funding as they get that recognition from the community and get the vote of confidence from the general ADA holders. And so we've seen so many projects come through Project Catalyst process that don't ever get the follow-on funding, but still continue to build and launch. And some of the best things that are currently in the ecosystem have come directly from the community in a team that's building with no funding, a team that's building with bootstrapped money from friends and family, and they put the best products out there. So it's amazing how the deal flow really should start at Project Catalyst and then work from there in the Cardano ecosystem at least. And with the advent of AI, additional strong tooling, languages like Icon, some of the tools that have already been built by the community, the ticket size may not need to be as big as it would be in many other industries. And so I think that with venture capitalists on stage here coming to Cardano, it would be an incredible opportunity to invest in the community and then get projects that are already proven to be complete, working, successful, have buy-in. Even after they've launched, they still haven't been get the funding to get to the next level. So there's a lot of good things that are being built if you just watch the community.
Matthew, can I ask you a question?
Yeah.
What percentage of companies or projects are funded post Cardano projects?
I don't have the statistics about Project Catalyst, but I do know that there's a small portion of the projects that file for Catalyst funding get funded, and I think that if you were to just take a keen observation. I mean, sure, Danny Rebar's here. He's one of the main people that's involved in Project Catalyst. Lido Nation, Darlington is here to discuss as well. You'll see a lot of projects that don't get funded, and then they apply for the next round, and in between they've built something great, and then they try to get funded for that, and they either get it or they don't, and then they move on. But there's certainly a large number of things that have been incubated in Catalyst that have turned into great parts of the ecosystem. And many things that had the potential to get there, but they just sort of ran out of gas.
I asked that because I see a lot of parallels with the gaming industry. So there's great, publishers, creators of games, but they pretty much don't have the skill sets to basically build a company around it. So they have to go to publishers, and typically, it's literally less than 1 or 2% that really makes a blockbuster hit. And maybe it's really a process of attrition that we have to go to allow for the best teams and talent and projects to survive. I don't have the answer for that, but I'm just drawing a parallel that I see in the two industries.
I think it's common across several industries, in my opinion. Like, look at fashion. You have so many young designers, budding designers that are completely competent, just like, the major designers. But then it's kind of, it's kind of who takes you along that journey. I feel like it's very important. Not everybody can be, self-sufficient. Like, sometimes you have to be handheld. And LVMH is a great example of that. LVMH has, found smaller companies and brought them up to the top. Louis Vuitton, he wasn't a businessman, he was a designer. But it was Bernard Arnault that took him to the next level. So I feel like maybe it's across several industries, and maybe accelerators and incubators really do good for this kind of, especially this very emerging industry. What are your thoughts on accelerators and incubators? Vijay, actually, specifically, we were talking about this backstage, that you don't just invest in projects, you really kind of take them, you kind of guide them. Can you maybe elaborate on that?
Yeah, I think in a similar thread that Matthew is alluding to, I think for successful companies to be nurtured, one has to go through a process of basically, proof of concept, getting product market fit. But often the knowledge is not residing in the domain of the founders. It's really within the community. And so to socialize the idea within the community through mentoring or getting advisors and so what really these incubators and accelerator does is to basically accelerate that process quickly enough that they basically get proof of concept in the marketplace as quickly as possible, get traction, and also because it's community-led, it allows for a faster adoption of the product in the marketplace. It allows for investors to come in quicker because of the recognition they get from the wider community. And so what we do at Techstars, as an example, we run 55 programs globally, investing 700 companies this year across different sectors from food tech to space, defense, and Web3. And what we do is basically we surround these companies with the best of best mentors to allow them to accelerate and grow quickly. What that then does is basically addresses one of the significant problems of funding is provide a deal flow for the VC industry. So in other words, the VCs are looking to us as a deal generator to basically look for the best talent and the best companies to invest in. And so we get a high chance of probability of follow-on investments just because of the process that we put through these companies. And I believe that that's really good to evolve the ecosystem to nurture entrepreneurs at the nascent stage rather than just jumping into building your company on your own and fundraising on your own. I believe that's a good way of doing it.
It's a lot quicker too, yeah. Does anyone want to add on to the topic of accelerators and incubators?
Personally speaking, we are venture capital who don't actually incubate much at the initial stage, but we leverage on our ecosystem resources to help the business grow. And I think in the Web3 space, the resources that we might need to grow our business is much more complex and broad than traditional finance, traditional VC, in a sense that we need money, incubate the business, grow the business, you need the business development, and after that, the project would issue the token, you need the trading skill, you need the skill set to design the tokenomics. After that, it might become a little bit of a private equity play if the value is more captured on the equity side. So it requires a lot of different resources and skill set within the framework of investment compared to other traditional venture capital space. So because of that factor, I would believe that not just one single company can provide all the resources at the same time. It needs to have a consortium of different entities that can provide its skill sets at each of the stage along with the growth of the startups.
Okay, so where are these investors coming from right now? Where should companies and projects go to gain traction from investors, and what kind of investors?
I would believe that in the very early stage, it was obviously those people who were more tech-friendly or who originally have some knowledge in the blockchain space who came in early. But now we are at the stage where there is a massive wave of new laws, whether it's in Hong Kong, Japan, Asia, and also MiCA law in Europe, and also stablecoin law probably next year. And I would think that the money is more coming from the corporate side, institutional investor side, than retail or more traditional Web3 spaces. So you would want to go probably more in a regulated space to raise fund rather than Web3 friendly kind of regions. This is my thoughts.
Matthew, what are your thoughts? Where's the liquidity?
Oh, well, if I knew, I wouldn't be here talking to you guys.
Or you're here
on
strategically because it's the UAE.
UAE, a phenomenal place. My eyes have been opened. It's one thing when you've only heard about a region and you visit it for the first time, and it really does change your perspective a lot. From what I can tell, is it's really we've recently launched a crowdfunding campaign on WeFunder. And so that's a nice regulated, Regulation CF friendly way of raising in the US. And we can raise from global investors as a US company. Retail or institutional, but you can put a Reg A in there as well. But from what I can tell is just as a community funded project that Mihin is going to be, we were approached by incubators, we were approached by different platforms that were offering expertise and not capital. And that's really not a good funding mix for us to sell portions of the company for no money.
But community members don't want institutions to come in. A lot of the times in Web3, they feel like the institutions are going to dump on the community.
Well, I think if you expect to have some kind of, if you want to double dip, if you want to get tokens and equity, and you dump the tokens on the community, that's very bad for the community. Especially when people may not realize that the tokens aren't actually equity. And they think that they own a portion of the project when they actually just own some utility that might eventually have some value. So that experience has been one that I think has soured the individual investors and these individuals who are active in the blockchain space who maybe got previously burned by a token dump, then are now starting companies, and then they see that same experience and they don't want to go through it again. So, so we're not doing a token, we're doing the stablecoin, we're doing an equity offering, and we're going to try to keep it as clean as possible as a regulated US company. And to that end, I think that it would be wrong to say that we don't want VCs, we don't want institutional capital, we just don't want predatory capital. We don't want any kind of institutional capital that will drain liquidity out of retail users' wallets and then go and hop onto the next thing. That's definitely a short road to walk on.
That's a good way to put it. And then if someone does have a utility token or token involved, then vesting periods always help. Good vesting periods.
Yes.
Yeah, Manal, what about you?
Well, responding to your question, I guess coming from Asia, Singapore, I guess there is a big concentration of venture capitals in Southeast Asia, and I guess what the UAE is doing brilliantly is attracting a lot of capital from around the world. Our LPs there from Australia and Canada, and they choose the UAE to be our base because of the regulations and the frameworks that both TIC, VARA, ADGM, they're implementing. So I guess this is what's really the region, why the region is flourishing, because they are putting the frameworks for other capital to flow in, even though the region is very rich. We speak about UAE, Saudi Arabia, Qatar. We are speaking about one of the richest countries in the region and in the world, but having that space and having all these initiatives by the government, they are really helping the Web3 flourish, and this is why we have such amazing communities coming over. Cardano Summit is now held, Algorand, and all the big chains, they are choosing UAE as a base.
And Vijay, you recently moved here from Saudi. I mean, Saudi is a huge market.
Yeah, so I've been actually moved from Washington, D.C. to Dubai 6 years ago and been operating in this region. I think if I just speak from the lens of this region, it's really interesting. I think often people say, Dubai is comparable to the Silicon Valley for Web3 in the Middle East. But just to break that down, I think firstly there's a very sincere initiative by the government to basically put the regulatory frameworks in place, starting with blockchain back in 2015. They have really trying to build an infrastructure that's world-class. But beyond that new regulations, think about this part of the world as a nexus for trade. It's historically been the fabric of Dubai's economy has been trading. And if you think about the 3 billion people around us, from the Indian subcontinent, Africa, and even Southeast Asia, that's where the biggest growth in, say, stablecoins and Web3 usage will come from. And you need to have a capital market to connect, entrepreneurs and the VCs and regulators. Dubai is best positioned for that. I'll just add one more point that I think, what's also interesting is that there is a significant Muslim market within this region. You think about 2 billion people, and the idea of Sharia-compliant coins, for example, is a really good example of where these opportunities would be. There are 300 global Islamic banks. They don't call any particular location a global headquarters. Dubai can position itself to be there, and I think these are very exciting opportunities for the region.
Yeah, I mean, a lot of people have said that the Middle East, there are a lot of sovereigns now in the Middle East that are looking to invest in Web3. Whether that is the case or not, I think, Manal, you hit the nail on the head. This place has been almost like a hub for everybody to come in, and it's kind of attracted liquidity from all over the world. And you have conferences here, you have initiatives, government initiatives. So look at the traffic. That speaks for itself. I mean, that's like everybody's trying to come to the Middle East. Now you have more jurisdictions open up. Ras Al Khaimah, Abu Dhabi, Dubai. I mean, this region is popping compared to other countries. It's good to be here. We ran out of time, but last one sentence from everyone. What advice do you have for the audience?
So for those people who are raising money right now and building a project on Web3, just be all in.
Engage.
Focus on your product, and better times are coming.
I believe the worst is over. And I think we've just gone through a massive winter funding winter. And I think looking into 2024, there'll be an upside in terms of transactions, in terms of investments. And so I'm pretty optimistic.
Yeah, right. Congratulations for making it through the longest bear market yet. And the fact that you're here today speaks volumes. So good on you guys. And thank you so much for listening in to our panel. Have a great day.